Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about how to make a whopping $100 in the stock market. I hope you guys enjoy it, and if you guys do, make sure you guys smash the like button and subscribe to the channel if you aren't already. So now let's jump into it, and if you guys have any questions, go ahead and ask them down below. Also guys, go ahead and check out my blog, moneywithcarter.com, talking about investing, money management, trading, stuff you guys would definitely benefit from. So now let's jump into it, roll the intro, let's go. Bam. So honestly, there are like thousands of ways to make money in the stock market, but honestly, I found that there are two very basic ways to make money in the stock market. The very first way is growth. So obviously this is buying a stock for $10, selling it for $20, and making $10 for each share you have. This is by far one of the most basic ways to make money. A lot of people do this for long-term retirement, and they'll go ahead and buy just the general market. So every time the general market goes up, they make a little bit of it. And that's probably the most absolute basic way you guys can do it. Just put money into an ETF that just tracks the S&P 500, and now as the economy gets better and as all these companies grow, you just make more money. So now how to make $100 in growth? It's very simple. All you guys need to do is take $1,000 and get a 10% return on that investment. I know you might be saying, well, Carter, that is extremely hard to do. Honestly, guys, it's not. There's a couple ways you guys can actually do it, but by far the most basic way is to buy ETFs that just track the market. Every single year, the S&P 500 really has a 10 to about 12% annual gain. So if you guys invest, hold it for a year, you pretty much make $100. But for those of you that don't want to wait a year, there's this stuff called trading. What this does is you guys find undervalued stocks, you buy them in hopes that they go up in price in the short term. This is what a lot of people love doing because you get short-term gains rather than waiting all that time for that, S&P 500 to go up. You get it in the short term. Then you can reinvest that money right back into other things, and you have this compound effect. A lot of people love doing it. So now let's actually go ahead and look at how I find stocks that can give me a 10% return. Very basic, let's go. Alrighty guys, so this is by far the most basic strategy that any investor or all investors need to learn. This is what you call support and resistance. So really what a support line is pretty much anytime a stock has got buying pressure at that certain price point. And what resistance lines are is pretty much any time at a certain price point there is selling pressure and the stock will fall. It's pretty simple. So you guys can see we have ticker symbol TOWN, also known as Town. You guys can see that this stock was trading at around $29 and around $26. Really that resistance up here, support really down here. You guys can see it hit it once, twice, and then we just had this overall recession which absolute tanked this stock down, and now just kind of trading in between here. You guys can see that this stock had a ton of buying pressure in this price point. So at around $15, you guys can see it hit it, bought up, hit it, bought up. Now look at this. It almost formed new higher lows. So these lows now are a little higher, which is good because that is an upward trend. That's what we want. So now what we're going to do is we're just going to mark out the new lows so you guys can see it. Boom. So now anytime that this stock has came in contact with this line, buying pressure, and now look at this. Right now the stock is hitting 1793. I do think that we're going to have a short-term little swing trade where there's a trade opportunity to make that 10% return. But how do you do it? So here it's very simple. All you guys are going to do is you're going to invest into this company. For it to get a 10% return, you guys are going to need this to come back up to, let's go right here. You guys are going to want this stock to come up to about $19. Okay, so now what if it falls? What if it tanks? Where do I cut my losses? I would recommend cutting your losses at around $17 flat. The reason why I want to do that is because I'm going to be risking $1 almost, because it's almost at $18. So I'm going to risk $1 to make 10. That is a 10-to-1 ratio. That is a 10-to-1 risk to reward. So virtually you could try this 9-10 times and break even. So, but realistically, it's one of these it's going to bounce, almost guarantee. So doing this, it's all about minimizing loss, maximizing reward, and all about being smart with your money, because you never want to invest because I told you, and you never want to invest in what you don't understand. So right now, I see a short-term opportunity that this stock could go from here, this support line, to this old resistance line. If it does, that would be actually about a 12% return. That would be a lot better. But honestly, it's all about being smart. So that is one of the best ways that new investors can learn how to make $100. Basic support, basic resistance. Very simple. So the second way that a lot of people make another $100 in the stock market is in the form of dividends. Really what dividends are is pretty much when a company makes so much money that they want to pay their investors part of the profit. It's pretty simple. Now, honestly, like myself, I love this because you get cash flow, you get income coming in, and you can use your dividends to cover expenses that you have. So you can use your dividend payments and pay for maybe a car bill or phone insurance or something like that. Just something in the real world that you get and it's paid for and you don't have to worry about it. Or you guys can take that dividends, reinvest it right back into the company, and you'll get this thing called compounding interest. Really what that means is all of those dividends are now going to get you more dividends and more dividends. So over the long term, you're not going to have linear growth, you're going to have a J-curve growth. You're going to make a lot more money in the long term doing it. But to make $100 from that, you guys are going to need to invest a little more money. I would recommend investing around $5,000. I know that may seem like a lot, but just hear me out. So with a dividend yield of around 3%, you guys are gonna have $150 of passive income coming in. You guys aren't gonna have to worry about that coming in. It's very, very low. Put it right into an ETF that just tracks the market, like VOO. 3% dividend, you don't have to worry about it. Large company, large corporations, top 500 companies out there. On top of the dividends coming in, you guys are gonna get the growth of it. So if you guys invested into an S&P 500 index, you guys are gonna get the dividend payment and you're gonna get the growth of the ETF. That is by far one of the best ways to make passive income out there. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. We'll see you guys tomorrow in another episode. Remember to stay happy, stay positive, and overall stay safe out there. We'll see you guys tomorrow. Take care. Peace out. Bam. Let's go. Bam.